What's going on, guys? Welcome back to my YouTube channel, and in this video we're going to talk about the price action rules in general and our rules, how we actually take the trades. But before we get started, we need to take a little moment to talk about how market actually moves and how the prices print on the chart. The most important thing to realize is that we cannot move the market. We are average retail traders. It doesn't matter how many contracts you can trade unless you're ridiculously wealthy. If you and your 20 friends sit down in one room and try to take a trade and you think you're gonna make the market move, it's not just gonna happen, just not gonna happen. So we need to understand that there are big players, dynamic players that are moving the market. And these players are big institutions, hedge funds, banks, all these institutions are using mostly programs and softwares to do the trading for them. So all we are doing, we're just following these big players. We're just following the dynamic traders who can move the market. We cannot move the market. So all the price action trading is, and all we are doing here is we're tracking a wild game. We're just tracking the wild animal that is leaving footprints, leaving mess where it has been, leaving some sort of scent you're passing through. All this is what we are trying to accomplish here, because nobody knows where the market is going to be a week from now. Nobody knows but those people who are actually taking the trade. Those people who got deep enough pockets, those big players, they know where the market is going to be, because they're the ones who are moving the market. They are the ones who are moving the market, so they know what's going to happen. 90% of retail traders on YouTube, nobody knows what's going to happen. Even I don't know what's going to happen long term. I just know that if I follow the price action and I will follow their footprints, I will get my scalp portion and I get out. And that's what I'm trying to show you guys here. Okay, so now that we understand how market moves, where do we find the proper entries? Because we cannot just take any entry we see. We cannot just enter on every single bar thinking that we're gonna work. We need to have some reason for entering. We need to find the proper spots when the prices are reversing, when the prices are pulling back, when the prices are making corrections. We need to find the proper entry to know how to correctly follow these big players. And this is basically what we are trying to do here. There is a lot more to price action trading, but our key setup, our key thing that we are looking for is the second entry at the very important entry point or key entry point. And what are key entry points? Key entry point is Trendline, EMA, or support and resistance. These are the key entry points. These 3 or 4, if you count support and resistance as 2. These four lines or 4 support and resistance type levels are the key entry points where we are looking to find the second entry. And why we are looking for second entry and not just first entry or not third entry? Well, because you can actually check the Al Brooks's material on this, because I have studied Al Brooks almost religiously when I started trading. It is hard to understand, but it works. He explains that when people are trying to do something once, they will usually give it one more try before they stop doing it again. So when it works the same way in trading, if traders are trying to move the market up, they will try to do it once. If it fails, they will take a little break and try to do it again. Then if it fails again, there is 90% chance that they will completely abandon their decision and go with the flow. So this is why we're looking for second entries. But not just second entries anywhere on the chart, like I said, at the key entry point. But simultaneously, we are also looking at failed second entries. And your first thought is probably, well, what's the difference? How do I know when the second entry is failing, so I know that it is a failed second entry and not just second entry that is failing on me? Well, the difference is we are trying to take second entry with the trend, and when we are taking failed second entries, it's usually counter trend trade. Like, for example, this is a failed second entry long and this is a second entry short. It is a failed second entry long because we are in a downtrend, and it is a valid second entry short because we are once again in a downtrend. So these are the main setups that we are looking for. But before I get into more details about the price action rule in general, how the market actually moves, because there are the rules of the trend line and rules of the trading ranges. I'm gonna take a quick moment to actually describe a little bit the money management and how you actually handle placing an order into the market. When it comes to money management system, this is basically up to the trader himself. I recommend going at least for 1-to-1 ratio, meaning you're gaining the same amount as you're potentially risking. In the ES that I'm trading right now, I'm going for 10 ticks, and most of the stop loss I take are around the 2-point area. So this is why I hedge my bets that I'm going only for 1-to-1 ratio. But if you're trading stocks or Forex, it's not going to be 10 ticks per se, because this is typical for ES. But you can eyeball it, how much is the average stop loss. You basically have to sim trade it long enough to get the feel what the average stop loss is, and your target profit is going to be the similar amount as the stop loss you are averaging on, let's say, 100 trades, and this should be equal to your scalp portion. Whether to place a stop order or limit order, this is solely up to you. I like limit orders because I like to sneak in a little bit back to, you know, hedge my bet so I can scalp much more easily. But if you like stop orders, hey, it's your choice. It doesn't really matter. Me personally, I like limit orders. The only thing that is absolutely rigid is you have to put your stop 1 tick below or above the signal bar. So if you look at this area right here, this big bearish signal bar, you have to put your stop loss 1 tick above the signal bar. You don't want to put it more ticks than 1 tick, because if the prices go 1 tick above this bearish signal bar, the prices are most likely going in the opposite direction and you're most likely wrong. So you just want to cut your losses as quickly as you can. You don't want to be one of those guys who keep moving the stop further and further back and giving all their money back on one single trade. Trust me, we've all been there. So put your stop loss 1 tick above or below the signal bar that you take in the trade. This is a rigid, and you cannot change this rule. And the final rule when it comes to, or there are actually 2 more rules when it comes to managing the trade. If you miss a trade and you actually get the scalp portion, let's say you go short here and market moves and scalps the 10 ticks, but you didn't get filled, but your order is still hanging here, you have to cancel it, because the trade has worked, but you didn't get filled, you get left behind, and that's okay. But you cannot wait to get filled again and then hoping you're gonna make the trade happen once again. It's not. Once a trade makes the scalp portion and you didn't get filled, you have to cancel the order and look for the next one. And final rule when it comes to managing the trade is you have to let the signal bar finish. This is the big problem when I first started trading, you know, a bunch of years back ago, is I actually stumbled upon a few traders who taught me to try to sneak in a little bit early. When you see the signal bar pushing in one direction, place the stop order there and hope the signal bar is going to work. But you don't want to jump the gun. You need to wait for prices to finish, for signal bar to finish, to know whether it is truly a bearish bar or a bullish bar if you're looking to go long. So never try to sneak in early. You know, the price, just because prices are reversing nicely on one move doesn't mean that they're not going to bounce back few last ticks, you know, few last seconds. They might go in a completely opposite direction and you just got trapped because you went long or short too early. So always wait for prices to complete the close, the countdown. And I just want to quickly talk about 2 price action rules that are common for the markets. And the main rule is called the Trendline rule, and the rule says that after a break of a trend line, there is most likely going to be a retest of a new extreme. After a break of a trend line, you are expecting at least correction and 90% wise a break and a new extreme. You can see they happen right here, break, new extreme. You can see they happen right here, break and a new extreme. And it's happening on smaller trend lines as well. So this is the rule of the trend line. And there is a rule of trading ranges. Stick with me. I know there is a lot to talk about, but it is worth it because I explain this in the video as I go on. So I want you guys to understand what I'm talking about and what I'm looking for. Once the prices go into trading range, The trending range, the best way to trade trending range is obviously sell the highs and buy the lows. Duh, that's what everybody's teaching. You probably know that you should avoid trading in the middle. But the best way to trade trading ranges is the fade the breakouts. Fading is the trading in opposite direction of the breakout. This is the fading of the breakout, and this would be the fading of the breakout. And you can see most breakouts of trading ranges will fail. But let's talk about actually the practice of the rules. As you can see, prices are working lower. So we are in a downtrend now. And what are we doing? We are waiting for second entries at the key entry point. So this is the new low. Prices are working higher, but we did not trigger below any of these bars. We didn't trigger below any of these bars. This was the first bearish bar that we triggered below this. You can see we triggered below this bar. This is the first entry. It is close to the key entry point, so we can count that. This depends on experience, but this is just the first entry. This is not according to our rules, so we have to skip this trade. Just because it worked here doesn't mean it's going to work next time. But prices tried to make one more push higher and failed once again. Now this is still part of first entry, but now we made a lower high. It is still at the key entry point, and trendline rules are telling us that we are looking for a new extreme. So this is why it is a good trade to take, even though it is not a textbook second entry. Just because it's not second entry doesn't mean that if you got more rules there, connecting the dots for you, you're not going to take the trades. But if you're just starting out, looking for typical second entries is the best way. I'm marking all the possible setups because I got the experience and I want you guys to get the tips, what I've learned. So right now we are working lower. We made a break and a new low, a little bit push lower. So this trend line has already played out, the downtrend has already played out, and now what we are looking for. The trend line rules are telling us we should be looking for a correction at least, or a complete reversal. And this is what happened. Prices reversed from here, and once again notice this, we are not breaking lower below any of these bars. This is the first break lower, so this is just a first entry below this bar. Prices are pulling higher, so first entry failed. First entry short failed when we broke above this bar. This is a failure. So prices attempted to make a second entry. We are working higher. We triggered one tick below this bar. We're pulling back. First entry failed. Second entry triggered below this bar. This would be good bar to take. Good trade to take. This would be a good second entry because we worked higher. We spiked through the EMA. EMA is holding, so this is one key entry point. There is a trend line. This is a second key entry point. So we got two key entry points going in our direction. We are looking for new high, and we are looking for a reversal because this downtrend has played out with the break and a new low. The only reason why I didn't mark this trade, even though it is a perfect setup, is because the signal bar is absolutely horrible. We are looking to go long, and we need a nice bullish reversal bar like this. This is a bearish bar, stims on both sides. So even though this is a second entry, the signal bar is important. Don't forget that. And we made a one push lower, still at the key entry point, still at the trend line and at the EMA. So this is why this was a good trade. Beautiful signal bar. So just something to think about. Second entry was perfect. Key entry points were perfect. And you see, if you would have taken it, it would have worked, because the second entry is such a powerful setup, it still would have worked. We just want to maximize, we want to get as much higher probability on our side as we can. So it's better to wait for the better signal bar. And once again, we are working higher. We have a break, couple legs to a new extreme, and you can see we broke few ticks higher, so we have a new high here. So what the rules of the trend line are telling us, after a break of the trend line, we're most likely going to have a correction and a break and a new extreme. And this is what happened here. So we have a double top forming here. You're expecting the reversal as it is happening. You can see we pull back through EMA. This is the new low. This low is lower than this low. So the countdown's over from here. Pull back. First entry, we triggered. You can see the one little tick break below this bearish bar. So this is just a first entry, but it's not according to our rules. We are looking for second entry. So pull back, first entry, pull back, second entry. The first entry failed once we triggered one tick above this bearish bar. So this is a failure, first entry failed. And the second entry triggered with the tick, one tick lower below this doji bar. It is at the EMA. We are looking for break and a new low of this trend line. So second entry at the key entry point at the EMA, and we are waiting for a new low. Good quick scalp to take. I was quite surprised. I was surprised that we reversed once again highly like here. And this is, you can see, nothing in price action is 100% and nothing is going to work 100%. Nothing is written in stone. But you can see, you can get, even if we were off here, but our rules still got us easily our scalp portion. This is what we're trying to do. This is the nice advantage of intraday trading. We can even be wrong and still make a winning trade, because this is how this strategy is set up to do. You don't have to be right on big moves. You just have to follow the institutions and just get the piece of their money. Just get the piece of their money. And it turned out we actually made a few more legs to the new high. This was the first leg. This was the second leg. You can see it's not quite measured, but this was a very surprising move. I don't know what happened here. Nobody knows. Only the institutions who are placing the trades know. But we definitely got a new high here. This trend line working higher, you have a new high here. But you can make a case that a lot of traders probably didn't take this new high into consideration, so they tried to make a new high. But that's up for debate. But you can see clearly new high here. This bullish trend is over now, just like this bearish trend was over here. Here, this bullish trend is over. So now, this is the highest high of this entire swing. This high is higher than this swing, is higher than this swing. This is the highest high of this move. So we're counting over from now. Prices are pulling lower. First entry triggered one tick above this bullish bar. We're working lower. We're shooting through the EMA. And second entry triggered one tick above this bearish bar. So we now have two-legged pullback, first entry, second entry, and now we can draw the trend line. You can see trend line is fitting nicely from the both sides. This is how you know you have the trend line correct, if the prices are fitting neatly in the trend line. So the second entry is now open because people who went long on this second entry went long one tick above this bearish bar. It is a horrible signal bar, ignore that. For our counting rules, this is the second entry. And with the break, and you can see this bar broke, made the second entry long as a failure. But like I said, we need to wait for signal bar to finish. You cannot enter. Let me show you this so you can see a little bit more clearly. We cannot enter one tick below this bullish bar. You cannot enter one tick like this below this bullish bar, because we need to wait for proper signal bar. This is a horrible bullish signal bar. So with this signal bar, this made the second entry failure signal bar, but we didn't tick lower. So the failed second entry long didn't trigger for us to go short. It happened here. We made one little push higher. The trend line is still holding. It's a key entry point, and now we finally triggered below this and even this. So this is a failed second entry long. Not that perfectly clear, but it is there, and you can see it worked once again. And just like always, you have a trend working lower and you have a break. Now you're at the EMA. So what do? Okay, we draw the trend line because the shorter term trend lines rules work as well. This is just a first entry. We've triggered one tick below this beautiful reversal bar, but it's just a first entry. We cannot take this. And there are trades, there are first entries that I'm going to mark, because based on experience, I'm getting the gut feeling that it's going to work. So if you watch my videos, this is what I'm trying to show you. But if you want to stick religiously to the second entries, you have to skip this. And it's a good move to skip this. So we have a first entry here, prices pull back, and a second entry here. First entry, pull back, second entry with the trigger below this doji looking bar. We are at the key entry point. You can see how EMA is not letting prices to close higher. So this is one key entry point. This is one key element of our rules. It is a second entry, second element of our rules. We are in the midst of a correction in the break, and we are looking for a new extreme. Third element of our rule, because we are waiting for the new low of this downtrend working lower. And you have a break and you have a trend line working higher, break, and attempt to make a new high. Now, you are probably wondering why sometimes we get a clear new high and sometimes we just get attempt. The attempt a lot of times is enough for us to count it as a new high. You cannot make a new high here because we are at the key entry point, and the key entry point will allow us to make the new high. So we just have to be happy and be content with at least attempt for prices to make a new high. So this is the second entry. Once again, you can see perfect price action. This is textbook price action, and it's actually good that I get to film this video on such a beautiful textbook day. Most days are not like this. And once again, for some reason we kept going lower here. Maybe there's a bigger pattern unfolding. Can be something like this. This can be a possibility. Of course, if you're a beginner trader, with the break and a new low, you should stop looking for shorts. Okay, that's what you do right. But notice how this is a little bit more advanced. This is why with experience you get better and better get this. Why this is a good second entry. Once again, notice new low, we are working higher. First entry, break, make a new high. This bullish correction is over. We have a break and a new high. Second entry, trigger one tick below this. It is almost repeat pattern of this, even more perfect. The key entry point is still holding, but the reason why it's okay to look for shorts here, because you can see how the EMA is rejecting prices. This is not a reversal pattern. You can see, take a look at this. You have a break right here. You have a trend line working lower, break, new low. And you can see how prices push the EMA, and EMA now acts as a support. This is a reversal pattern. We push through the EMA and EMA acts like a support. So EMA is helping us here to go long because it acts as a support. But here, this is not a reversal pattern. This is the opposite of reversal pattern. Even though we are expecting at least a correction, and this is what it happened. This was a correction. We are expecting to make to reverse from here. You need to wait for reversal pattern. Just like reversal pattern happened right here, because we went through the EMA, and like here we went through the EMA. You have a trend working higher, break, new high, and you can see how EMA didn't put any resistance. We sliced through it like it's not even there, and now it's holding as a resistance. This is a reversal pattern. This is not a reversal pattern. The EMA, we didn't close above EMA. How can this be a reversal pattern if we didn't even close above the EMA? EMA is not holding as a support. It's actually doing the opposite. It's holding as a resistance. So this is a two-legged pullback. Second entry, once again, textbook setup. So I hope this is helpful to you, and it is quite a lot to take in, but you can see the second entries, they are there. It is obviously it is not that clear cookie cutter once you're trading live, but you can see if you follow the short-term trend lines, you follow the EMA, and you're waiting for second entries. If you're just patient, this is what happens. A lot of people are either being too scared to enter on the right second entry, or they're being way too patient. They're jumping the gun way too much. They're jumping way too early. But let's take a look actually yesterday, and you can see how yesterday played out. Once again, you are working lower, you have a break and a new high, and the reversal from here. This is textbook price action. You can see I'm not making this stuff up. This stuff works, and you can actually learn this if you just dedicate yourself to it. And this is a reversal pattern. You can see how EMA is not even there. We slice through the EMA like it ain't nothing. Reversal pattern. But let's talk. This is what I mentioned a few minutes ago. How the shorter term trend lines, sometimes we will not get a new extreme because the key entry point is holding the prices. And this is once again the situation. The key entry point here is the trend line and the EMA here. This is the new low of the move. Bear with me, I know, just grab your popcorn, grab some juice or coffee, and just let's get into this. This is a new low. Pull back. First entry, we triggered one tick lower below this signal bar. It fell on them. We broke higher, it fell on them, and a second entry, one tick lower below this signal bar. So this is a second entry. and the signal bar is horrible, but you can see it still, once again, it would have worked perfectly because the price action works. Why I don't like taking this trade, apart from this being not a great signal bar, is because the trend line rule works as well on the smaller trend lines, on the smaller, you know, the patterns. And we have a small little correction working higher here. We have a break and an attempt to make a new high. This is the first break, and prices trigger one tick above this, and you can see prices tried to go higher. They tried to retest this bullish trend line working low higher, but they got slapped on their hand and instantly reversed down because there's a key entry point. There is a trend line working lower, there is an EMA, and this is the lower high, and this is similar pattern to here. We are working higher, first entry, and you can see prices went a little bit lower, and still they tried to make the new high. They pushed higher, but instantly the EMA and the people are waiting. This was such a strong move down, people are waiting for a new low. This is the lower high, so the key entry point and the overall momentum didn't allow this shorter term prices to make a new high, and this is what happened. The same thing happened here. So we make work lower, so you now have a break, but now once again you have a trend line working higher, you have a break and an attempt to make a new high. This is not that cookie cutter clean for beginners. This is a good trade for a little bit experienced traders because we are still looking for shorts. This is such a big move down, gigantic move down. So even though you don't have a new high and the key entry point is not allowing it, it is still very good trade because this bullish trend line now have a break and at least attempt. But this was such a strong move down that I actually took this trade and I liked it. But you will actually learn this with experience, so don't worry. And if you're just unsure, you can just skip this. It's okay. But remember, price action rules worked once again. Break, new low. So we are now looking for at least a correction or reversal. But you can see I'm just gonna throw a little nugget in here. This is once again almost 90-degree angle move, and I keep telling you they won't last a long time. So once you see trend line, a break, and a big sharp 90-degree angle move, you're most likely going to reverse from here. So this was very expected by experienced traders. And once again, take a look, another situation, and you can see the second entries are working, but it's more safer. You get much more higher probability win percentage. You get 90% win percentage if you just wait for the retest of a new extreme, the attempts, just like we tried to make a new high here and the key entry point is holding the prices. We have a new high here, pullback, first entry, we trigger one tick higher above this bullish bar, it failed, working lower. Second entry, we trigger one tick above this. So this is a second entry long off the trend line and off the EMA and a little bit even off the trend line. It's not perfect, but you don't have to be perfect. So looking back now, this I'm probably gonna even mark it because this is such a beautiful signal bar. But you can see how much safer it is to wait. Prices broke higher, so we have a break of this trend line working lower and attempt to make a new extreme. But the EMA, one key entry point, trend line, second key entry point, the key entry points didn't let the prices make the new extreme. And this is a beautiful bullish reversal bar. You have to go long here and you're working higher and higher. You make a new high here, you have a first entry, pullback, second entry, and you can see how horrible signal bar this is. And if you just trade blindly second entries, you would have gotten burned here. But that's okay because you have four winners here, or you have, I don't know, 2 winners here, multiple winners here. That's what trading is about. Nothing works 100%. If you just close your eyes and take this horrible bearish signal bar, you got trapped because the signal bar was horrible. You're looking for a signal bar like this because we're going long, so we need a nice bullish reversal signal bar. But it's okay. If you take all the second entries with the trend, you're still gonna end up with 70% win percentage easily. I just like to be right as much as I can, even though I want to be emotionless as a trader. I just want to get my odds in my favor. So you can see you have a break, new low, new low, new low right here. The EMA is holding and you're looking for a new extreme to make a new extreme. And some of you might asked why I'm not looking for failed second entry with the counter trend trade. You're looking for failed second entry once the one trend played out. So you have a break now here of this bigger bullish uptrend. You have a new high here. So from this point on, if you want a counter trend trade, that's where you look for failed second entries. With the trend, we're looking for second entries, and counter trend trade, we're looking for failed second entries. But now we're getting into trading range category, and you can see that the trading range, now we have to a little bit tweak our rules, because now we have to play trading range rules. And during trading range, we are most likely looking to buy the lows and sell the highs and fade the breakouts. I'm just going to mark it, I didn't take this trade and it is hard to take. I'm just going to mark it as a failed breakout for purpose of this example. And you can see you always have to draw the short-term trend lines, and you can see nothing is perfect. We didn't make a new low right here because there's a key entry point to support. We though have made a new high here. We're working higher, break. This is a key entry point. Look at this. This is a key entry point. Support is proven. Good trade according to our trading range rules. We're working higher. We made a 2 legs to a new high. And now, trading range, support, easy to find, resistance, easy to find. Okay, we have a break of this bullish trend line, break, new high. So we are looking from this point. This is our chance to look for failed second entries. Because this correction played out, this bullish momentum played out. We are at the resistance, and we are now counter trend trading because we are about to sell the highs. We're smart traders. We're selling the highs. You even have a little bit breakout here. So this is a failed break higher as well. This is the new high right here. This high is a little bit higher than this high. Price is pulling back lower, back into trading range. First entry, we trigger one tick above this bullish bar. We trigger one tick above this bullish bar. It failed. So first entry long failed. But once again, human psychology, people will attempt to do things twice. This is a two-legged pullback. Market moves in twos. Remember this. And look at this. Oops. This is a two-legged pullback on a little bit smaller picture. One leg, second leg, and it is a two-legged pullback on a little bit bigger picture. This is the one leg, this is the one leg, and this is the second leg. So there's levels to this, and it may seem a little bit overwhelming now, but once you get into this, it will be fairly easy to identify the two-legged pullbacks. But this is a first entry, second entry long. It's going higher, and it's failing. It failed one tick below this big bearish bar. Now I marked this for sake of the example. This is a failed second entry long at the high of the trading range. Nevertheless, my experience is telling me that we are on the EMA, and you can see EMA is kind of holding the prices. So once we made this beautiful bullish reversal bar, gigantic bar, a lot of people jump on board, going long into the resistance. This is a little bit lower high. This is still the continuation of the failed second entry long, but this is much safer setup right here. But nevertheless, the failed second entry long still would have worked easily. So you can see that the rules apply. When I'm doing my videos, I'm just trying to give you all the nuggets that I've learned over the years, almost over the decade. I'm in my 9th year now. I started trading when I was 18 or 19, something like that. So I want to give you as much as knowledge, as much experience as I possibly can. And you have a failed break higher and failed break low. This is pretty much self-explanatory that you want to, this is hard for beginners to trade because this is so counterintuitive. Because look at this bullish uptrend now, and look how the prices has proven. Come on, Thomas, you cannot go short here because the prices have proven. Anybody with a common sense, any doctor, any engineer, any lawyer can see that the market is going higher. Who with their right mind would want to sell this market when it has proven, prices have told us that we are going higher? Well, this is the common sense that you have to throw out the window. Because of common sense, some of the most smartest people and some of the wealthiest retirees, the people that are very experienced and very successful in real life, are failing miserably in trading because they rely on their common sense. Common sense will not help you in trading. You have to erase completely everything you've learned during your life and embrace the way market thinks and market operates, because this is so hard to take. This is so hard to take, but you can see you have to trust the rules that most breakouts will fail. And it happened right here. You can see, look at this bearish momentum going lower. Now we are clearly reversing. Okay, I was wrong right here. I was trying to go long here, but it failed. But now I'm gonna be right. Look how this bearish momentum is going lower. Okay, now we are reversing. Okay, I got it. I gotta go short. I'm gonna go short on this bullet, on this doji bar right at the low of the move, and boom, it's a fell break lower, and smart institutions are going higher. They just trapped everybody. So this is just something to think about. Hopefully this video was of help to you. You can see the second entries with the trend. They are there at the key entry points. The EMA, it is a 21 bar EMA, by the way. This is the key entry point. And if you get any comments, feel free to put in the comment section. I will try to reply, or you can shoot me an email. I will, though it will take me a little bit of time to get through all the emails, because the channel is growing, which I really appreciate, and I got only a limited amount of time in a day. But hopefully you liked the video, hopefully this was useful to you, and I see you guys in the next video. Bye guys.